The exit analysis graph in Edgewonk is one of the most powerful features because it shows you the path of the price during your trades, and it can help you improve your take profit and stop loss placement, which will boost your reward to risk ratio and your overall profitability. When you open your chart lab, you find it here under exit analysis, and it brings you to this chart. There's a lot going on here. So let's focus on the individual data points and let's explore this step by step. Each bar, red and green, stand for one trade. The green part of the bar shows you how much the price moved into your favor during the duration of the trade, and the red part shows how much the price moved against you during your trade duration. The green horizontal line is your take profit, and the red horizontal line here is your stop loss. And this black marker is your actual exit. So when we zoom in, we can see this a little bit clearer. So we have three trades here. You can see all of the three trades would have gone on to hit the take profit here, because all of those large green bars would have reached the horizontal green line, which is the take profit. This trade was closed for a profit because here the black diamond marker is above the zero line, and here as well. Both trades also hit your take profit. This trade was closed for a loss because the black diamond marker is below the zero line. On those two last trades, the price moved against the trader only a little bit. And you can see that when we hover over this, it's called drawdown, the red part, -8% and -27%. So here the price only moved 8% against the trader, here only 27%. So those two winners worked almost right from the start. There was only a small drawdown. Here the analysis is interesting because the price could have reached the take profit here because the updraw of 100% shows you that the price would have reached the take profit during the trade duration, but the trader closed the trade here. So most likely what happened is that the trader entered the trade, the price moved against him and he closed it, and then later the price moved towards his take profit, but he was already out of the trade. What we recommend to get a better idea is to always use the outcome filter when analyzing this data set. So for example, we can only choose to look at our winning trades here. What we see is that it looks very good because all of the black diamond markers, or many of them at least, are at the take profit line, or at least very close, because the average exit winning trade tile here of 77% tells us exactly that. On average, we exit our winners 77% towards our take profit. However, the average updraw is 98%. So on average, on our winning trades, the price comes 98% towards our take profit. So almost always does the price move into our take profit on our winning trades. Very, very interesting finding. And it shows us that we can let our trades run a little bit more. We can be more confident because on average, the price keeps going after our exit. At the same time, this could also mean that our take profit is a little bit too conservative because the price seems to have a very easy time to reach our take profit. In that case, we could experiment with a more aggressive take profit, so setting the take profit a little bit further away. Of course, this should be done carefully and slowly and gradually, and then see how your metrics change over time. But this is a very, very important finding here on the exit analysis graph because it shows you that there might be room to improve your edge. Of course, we can also change this from winners and we only look at the losing trades. And what we can see here is that his losers don't work out at all. So when he is having a losing trade like this one, the price moves towards his stop loss, he exits his trade for a loss, but the price almost never, barely moves into a positive territory. So there's almost no positive P&L. And that seems to be the case for many trades. Of course, there are some outliers where the price would have moved towards his take profit. But this is a very interesting finding here. And we can confirm that the average updraw of losing trades, so this corresponds to the green part, is 36%. So on average, the price moves only 1/3 towards his take profit on his losers. At the same time, he is also quite good at exiting his losing trades. So he's exiting his losers as 75%, which means 75% here towards his stop loss, which is somewhere here. But on average, the drawdown is 97%. And we can see that on almost all of his trades, the drawdown, the big red bar, is hitting the stop loss area. So if the trader would not exit his losers ahead of the stop loss, he would have lost more. So the trader is very good at cutting his losses. However, he could also think about moving his stop loss a little bit closer here, and he might be using currently a stop loss approach where the stop is a little bit too far away. We can confirm that once again by looking at the winning trades. So what would happen if we move our stop loss closer on the winning trades? Let's assume we move it to 75%. There are maybe 1, 2, 3, 4, 5, 6, 7 trades where the price now hits the stop loss instead of the take profit. But on all of the other trades, you would boost the reward to risk ratio, because a smaller stop loss with a wider take profit, as we've seen in the beginning of the video, could also make sense, would boost his reward to risk ratio. And those are invaluable findings that you will not find any other way. So make sure that you use the excellent analysis graph, make sure that you understand it, and that way you can unlock a whole new edge in your trading.